Joining us this week on Iron Kenya is Aly-Khan Satchu, the Chief Executive Officer of Rich Management, to delve deeper on the macroeconomic outlook. Thank you for joining us.
Thank you for having me, Beatrice.
We're looking at the fuel prices that fell across the board. And we're looking at it from a point of view of inflation and interest rates, where they're likely to head. Are we likely to see inflation go deeper this month, coming also from last month where it actually also went slowed? Are we likely to succeed slow this month?
So just to contextualize it, just a few months ago, we hit a record cycle low on the inflation rate, a level never seen before. We ticked higher ahead of the election, as you'd expect. Tsunami of election spending. You just had to go around Nairobi to see how much was spent. And then it's now turned lower last month, and I expect it to continue lower, in fact. And I think a number of important things are happening. The shilling, I think, is going to remain strong. I have an objective of 80 against the dollar. That will be very supportive to keeping the inflation rate lower. And then I think globally, we've seen this incredible volatility in the last few weeks around the gold price and the crude price. They're both going much lower, it seems to me. So I think that's also going to be very, very helpful. Crude oil is such a big factor in our macroeconomic outlook. If you've got to have a view on where it's going in order to understand what's happening with the economy. So I think both of those indicate to me we're going to remain in this sweet spot where rates remain low, the currency is strong, and I'm quite confident about that outlook.
You mentioned 80 versus the dollar on the shilling.
Yes.
What's the time frame you see this happening?
I had this 80 prediction out before the election on the basis that the election was well handled. It broke the sequence of mishandled elections we've had. It reduced the political risk in Kenya. It's created a de-risking around the shilling. We're paying high interest rates in a world where people are getting zero in most parts. And on balance, I think this is all going to support this move to 80. There seems to me to be a lot of money outside Kenya, which was waiting for a green light. I expect that to crowd in. A lot of our domestic investors became defensive, bought dollars, for example, and I expect them to have to turn tail and buy the shilling back. So when I take all of those into the mix, I think the shilling moves to 80. Of course, the central bank was the biggest buyer of the shilling when the shilling got up to 88. So they're the only ones I can see who might slow that rise down whilst they book their profits. And congratulations to the governor, he did very, very well.
Looking at the macroeconomic condition, whereby we saw the policymakers hold their rate in the March monetary policy review, and they cited things like they were buying time to see how the elections would go. They also cited the global economic outlook as being a bit sluggish. And now we are coming at a point where on our end, the elections went well. And you're looking now, some people are very optimistic of a takeoff in terms of economy. How do you see the next more monetary policy meeting going in terms of rates?
I think in terms of rates, I would expect them to hold, because I think, you had this blip higher around the election time. I think they want to see a bit more data before they make their move, and also give the government a chance to settle in. We're still waiting for the cabinet. We're still waiting to see if there's going to be any dramatic policy changes under the new administration. So on balance, I think the next move is definitely lower. The question is around timing. I don't think we'll see it at the next meeting, but I think we will see a move lower. The problem remains is the transmission of the CPR rate to the economy at large. We've got this extraordinary widespread between bank lending rates and the CPR. It seems that they are disconnected. And I think the policymakers, if I were sitting in their shoes, I'd be looking to pressurize the banks a little bit more to get with the program, because I think at times they're just simply not with it.
All right. Finally, looking at the government, whereby we are seeing a lot of domestic borrowing.
Yeah.
And interest rates last week came in a little bit lower, edged lower. What is your outlook on interest rates?
I think you mean the government of Kenya yield curve?
Yes.
I think the government of Kenya yield curve is paying handsome absolute interest rates in a world which is awash with paper money, right? So when I contextualize it in the globe, I think our rates are attractive. I think they can come lower because people will find it an attractive place to do carry trades, for example, borrowing dollars, take the shilling interest rate, and I expect to see more of that kind of activity. However, I think the local institutions are overweight the bond market, underweight the equity market. That's why I think the equity market has got lots of legs, because I think these guys have got to play catch up. They're going to have to come in a big way. But the local institutions are overweight. So I think that puts a little bit of pressure on how the bond market behaves, and it depends on how they behave. But on balance, in a world where you're getting 0% in US, negative rates in Switzerland,
and 10% in Kenya,
0.4% on 10-year bonds in Japan. I mean, and here the biggest problem, the political risk has been reduced dramatically. It seems to me a very attractive place to put your money.
And we've also had some very good subscriptions in the previous sale.
Yeah, so I don't think the bond market is an accident waiting to happen. Not at all. Our debt to GDP rates are below 50%. So when I look at it in that sort of way, I'm quite confident. Plus, I think foreign investors are going to get a bit of a rally in the shilling. So it's going to play very nicely for